Hello everyone, this is Sébastien McMahon from IA Financial Group and I'm back with the weekly review for the week ending May 10th, 2024. So lots of things happening this week. We'll be focusing on Canada, but in Europe we had more confirmation that we're coming out of a recession. Services PMI was positive, retail sales was positive. Germany remains a weak spot, especially in the manufacturing sector, so we're continuing to follow that. In the US, we had a jobless claims report, which was a bit higher than expected. When we look under the hood, we think it's mostly noise that is there, but the market still reacted, pricing more Fed cuts during the year. Now, September cut is pretty much baked into the price, about 2 cuts by the end of the year. We still think it's a bit too much. We think that the data is not supportive of that. And we've been discussing for a few weeks now that around the too close to a US election, the Fed doesn't tend to start hiking or cutting rates. It's not a law of physics, it's just that the bar is high for them to get started. So we think first cut in September is not very likely for this argument. And also recently we've seen inflationary pressures in the US getting hotter still. So we think it's not really possible, but this is what the market is pricing for now. So before we dig into Canadian data, we'll look at this week's returns on the close on a Thursday. So positive week in markets, in equities and in bonds. Strong rebound for equities year to date in local currency. As you can see, pretty much all of the markets here in equities are between 7.5 and 11%, so very strong returns. Interestingly, it's in Europe that you have the strongest returns year to date. Canada is not too far behind the US, even though now that we've been talking about AI and tech this year, and we don't have much of that in Canada. Well, the cyclicals are participating now, so we're seeing good returns for the TSX. Year to date in Canadian dollar, the weakness in the CAD, of course, gives an advantage to foreign investments, but still, price of oil higher, price of gold 2% after 4 days, and as I am recording this Friday morning, markets are not open yet, but gold is trading higher by close to 1.5%, so we could see even stronger returns than that for gold by the end of the day. Copper also is higher, so cyclicals are participating, so good things are happening here in market action. Looking at the Canadian figures now for the jobs report. So jobs report tends to be pretty volatile. Last month it was minus 2,000. This month it's plus 90,000. Hot report, better than the expectations which were for 20,000. But still not enough to compensate, to accommodate the growth in the working age population. Growth in population was about 110,000 on the month. So again, we're not creating enough jobs to accommodate for that. So this is an underlying theme. And when you were reading the deliberations, the summary of deliberations from the Bank of Canada recently, they were discussing that the weakness of the labor market, we're not creating enough jobs for population growth. That was a point of concern for them. So even though we have a hot headline here, this is still an underlying theme. And moving to the chart on the right, we see that even though wage growth remains elevated, it seems to be sliding lower. So another good data point here. Of course, inflation is still close to 3%, but sliding lower. So we still think that the thesis for the Bank of Canada to start cutting this summer is strong. So between now and the next decision, which is on June 5th, we have the May 21st CPI report, which will be a very important one. It could confirm that it's time to cut, or maybe it will delay the first cut to the meeting, which is on July 24th, the one just after. But we're pretty sure that we're getting there. So this summer, we should see some rate cuts in the country. We thought maybe it would be interesting to look at one more chart on the labor market, just to zoom out quite a bit. So if you compare on this chart here, population growth over 1 year versus employment growth on 1 year, and we go all the way to availability of data, which was in the late 1970s. You see that it's not one line on top of the other, but they tend to move together. Until recently, now population growth is just growing asymptotically, and the jobs creation is normalizing lower. So this is the gap that is worrying here. If the Canadian economy is not able to create enough jobs to accommodate the population growth, then we run into issues, or at least that shows hints of underlying weakness of the Canadian economy, which is why the Bank of Canada thinks that it's time to start moving. At least this is what we interpret from their communications, and the pricing in the market is that we'll have a cut in June. It is priced in, so we'll see if that is exactly what happens. Now, staying with the Bank of Canada for a while, we had the financial stability report coming out this week. A few interesting charts that I thought it would be interesting to bring, because there could be this misconception that households are crumbling under debt, that we need to cut rates soon because households are choking. It's not really the case, and just here to bring a balanced message. And I thought it was a nice balanced message that was to be interpreted from the financial stability report. Two charts here. On the left, you have the debt servicing costs for new mortgages. So since 2022, of course, debt servicing costs are higher because interest rates have risen quite a bit. So this was to be expected. And also the share of new mortgages with a mortgage debt service ratio greater than 25%, which is generally considered as like the threshold where you're starting to run maybe into some issues in financing the debt. Also, it's higher. Now it's about 35% of new mortgages. It's not 100%, it's 35%. Of course, there's that. On the right, though, you see that the assets that are held by households since pre-pandemic are higher. So, yes, stricter payments on the left, but you have more assets on the right. So if you do the balance of these two, households, what we seem to see here is that they're running into some financing issues for sure, but we're not seeing waves of default. And this is the next chart here. The share of impaired loans in Canada, if you look at residential mortgages, consumer credit, non-residential mortgages, business loans, we're not seeing a rise in impaired loans. So the message, and this is what Mr. McLean, the governor of the Bank of Canada, was discussing in his press conference and when he was doing the media rounds this week, not this summer. He was saying that households seem to be adjusting their consumption patterns, so they're not defaulting on their debt. They're not running into issues financing their houses, but they are spending less and they're more careful with how they spend their money. Thus, the economy is slowing down. So this is one thing that they can do to help support the economy, which will support consumption, then create jobs, and get into this virtuous cycle, is to start easing. Likely, it's time to get going there. As I mentioned earlier, inflation is sliding lower, still high, but it's sliding lower. We're seeing wage pressure starting to abate a little bit, so it's time likely to get moving by the bank, and we think they will do a few rate cuts starting this summer. So just that was a few interesting things to share today. So what we'll be watching next week in Canada, building permits, housing starts. We're not expecting anything special there, but mentioned many times that just to accommodate population growth, we should see housing starts double or close to triple just to keep prices flat. It's not something that will happen overnight for sure, but it makes the housing starts report a very interesting one. In the US, we'll have the Small Business Optimism Survey. We'll have CPI inflation, likely again a hot report, 0.4% month over month is expected. Above trend for sure, and 3.4% year over year in April. So that could be the market mover of the week. Retail sales, building permits, and housing starts also will be coming out. So always a pleasure to serve you. If you like the content here, please share this review, and also more importantly, come back again next week for more content.